Hello everyone, welcome back to the channel. Today we're taking a deep dive into AZI stock, also known as Autozi Internet Technology Global Limited. This is one of the most volatile and controversial micro-cap stocks trading on the Nasdaq right now. Some investors believe it could deliver explosive returns if the company's plans succeed, while others see it as an extremely risky penny stock that could lose even more value. In this video, we'll examine the company's business, financial performance, recent news, risks, rewards, and whether AZI stock is a buy, hold, or avoid in 2026. Autozi Internet Technology Global Limited is a China-based company focused on automotive services and digital solutions for the automotive industry. The company operates online platforms that connect automotive parts suppliers, repair shops, insurance providers, and vehicle owners. Its goal is to create a digital ecosystem that improves efficiency in the automotive aftermarket industry. While the business model sounds promising, investors need to look beyond the story and examine the company's actual financial results. When we look at the fundamentals, we immediately see some concerns. Although the company generates tens of millions of dollars in annual revenue, it remains unprofitable. AZI has reported significant net losses, meaning it is spending more money than it earns. The company also faces challenges related to cash flow and profitability. Because earnings are negative, traditional valuation metrics, such as the price-to-earnings ratio, are not useful. This means investors are largely betting on future growth rather than current financial strength. Now let's discuss the biggest developments surrounding AZI. In recent months, the company announced several major strategic initiatives, including large investment commitments and digital asset-related transactions. These announcements attracted significant attention from traders and led to dramatic price swings. Supporters of the stock believe these deals could transform the company and provide access to substantial new capital. If management successfully executes these plans, AZI could experience rapid growth and potentially create significant shareholder value. However, investors should also pay attention to the risks. The company has previously faced Nasdaq compliance challenges and implemented a reverse stock split to maintain listing requirements. Reverse splits are often viewed as warning signs because they are commonly used by struggling companies whose share prices have fallen sharply. Additionally, because AZI is a very small company with a low market capitalization, it remains vulnerable to extreme volatility, dilution from future share offerings, and sudden changes in investor sentiment. Looking at the stock's historical performance, AZI has experienced massive price fluctuations. At times, the stock surged dramatically as traders reacted to news and speculation. At other times, it suffered steep declines that wiped out significant amounts of shareholder value. This kind of volatility can create opportunities for experienced traders, but it can also lead to substantial losses for long-term investors who are not prepared for rapid price movements. So, what is the potential reward? If the company's funding agreements are completed, its strategic initiatives succeed, and management can improve financial performance, AZI's small size means the stock could potentially generate multi-bagger returns. In speculative scenarios, stocks like this can sometimes double, triple, or even rise much higher in a short period of time. That possibility is what attracts many high-risk investors. On the other hand, the risks are impossible to ignore. The company is not currently profitable, it has a history of compliance challenges, and investors face the possibility of additional dilution or operational setbacks. If management fails to execute its plans, the stock could continue to decline. This makes AZI a highly speculative investment rather than a traditional long-term value stock. Overall, AZI is a stock that offers potentially high rewards but comes with extremely high risks. Conservative investors focused on strong fundamentals may prefer to stay away until the company demonstrates consistent profitability and financial stability. More aggressive traders who understand the risks may find opportunities during periods of high volatility. But proper risk management is essential. That wraps up today's AZI stock analysis. What do you think about AZI? Is it a hidden opportunity or a dangerous trap? Let me know your thoughts in the comments below. If you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss our latest stock market updates. Thanks for watching, and I'll see you in the next video.